move to the side. We would like to welcome you most cordially in Wolfsburg at Volkswagen's for the half-year press conference 2018. Holidays are more or less over, and I hope you spent a couple of nice days and started back in the office. We have done so. This morning we have the chairman of the Board of Management of Volkswagen AG, Dr. Herbert Diess, and the chairman and the member of the Board of Management responsible for finances, Frank Witter. Both will talk about the last 6 months, and they give an outlook, and afterwards we will have time for questions and answers. We start with Dr. Diess. Ladies and gentlemen, welcome to Volkswagen. Thank you for accepting our invitation to join us in Wolfsburg. The main focus today is on our financials for the first 6 months and our outlook in a persistently challenging environment. In the first half of 2018, our deliveries, sales revenue and earnings grew again. In some cases, we had quite a significant growth. Frank Witter will tell you more about it shortly. At the beginning, I would like to use the opportunity to summarize the last 3 months, but first of all, let's start with the KPIs. Our brands delivered 5.5 million vehicles to customers in the first half of the year, more than ever before. Sales revenue grew by 3.5% to 119.4 billion euros. Operating profit before special items rose by 9.8% to 9.8 billion euro. However, special items from the diesel crisis hurt our earnings by 1.6 billion euro again. We achieved these good results under quite demanding conditions. I would like to take this opportunity to say thank you to all of our employees. The hard work has paid off, and in the coming months we need a motivated and committed workforce in order to master the challenges that lie ahead of us. More on that in a moment. Now, ladies and gentlemen, our continuous growth proves that many new models from our brands thrill our customers all over the world. In particular, our SUV drive is very successful with models such as the Volkswagen Touareg, the T-Roc, the Skoda Kodiaq and Skoda Karoq, the Seat Arona, or the new Audi Q8. In all of the brands, we have a strong product substance. Quality prevails. In the coming months, we will do everything all over the world to restore and regain the trust of our customers worldwide and to strengthen it further. This is what I set out to do when I started my new task and my new job as the CEO of the Volkswagen Group in April. Our goal is to make Volkswagen a leading company in our industry in terms of profitability, innovativeness, sustainability, and customer satisfaction. We want to become the leading company in the automotive world. We want to be at the forefront of the automotive industry. It's still too early for a robust assessment, but I believe we have triggered good things in the last 3 months, and we have achieved a couple of things already. Perhaps our most important task at Volkswagen is and remains to be the cultural change. At our top management conference in June, for example, we dealt intensively with the diesel crisis. In this context, the top 350 managers in the group agreed on a common vision and a common understanding of leadership for the new Volkswagen. With our group-wide program, Together for Integrity, we have a binding framework for all of our activities around culture, integrity and compliance. In this, we are working closely and constructively and well together with the US Monitor Larry Thompson and his team. We see this as an opportunity to become a truly better company in all respects. The first Monitor report came out in spring. There are 32 concrete recommendations which we will be implementing till the end of August, so that's in the near future. The report also contains so-called observations, noting things where we as a group have already made major progress. In particular, technical development receives clear praise. Unfortunately, we are still encountering setbacks in the diesel crisis. Recently, the arrest of Rupert Stadler. We hope that public prosecutors will be able to swiftly investigate the matter. What is important is that Audi stays active. This is why we want to extend our gratitude to Bram Schott, who agreed to step in temporarily. He is fully committed and energetic. Moreover, we are making progress in handling and coming over the diesel crisis. In the United States, all the approvals for technical fixes have been issued in the meantime. In Germany alone, we have retrofitted almost 2.2 million diesel engines. That's more than 95% of the vehicles affected. We have taken 210,000 old diesel vehicles off the road with the Environmental Incentive Program. We are contributing substantially to the environmental fund set up by the German federal government, and we will continue to be proactive in our efforts to avoid driving bans. The Diesel Task Force at Audi has completed its internal analyses of the VTDI engines and presented its report to the authorities. We accepted the fine imposed by the Braunschweig Public Prosecutor's Office in the context of the diesel crisis and have therefore taken an important step forward in moving through legal proceedings in Germany. We have also moved forward with the strategic realignment of Volkswagen, and we increased the pace just as we said we would, for example, with greater entrepreneurial flexibility for our operating units. Autonomy for truck and bus is making good progress with the strategic partnership with Hino in Japan, with the transition to a joint stock corporation in preparation for entering the capital market, and by renaming the organization, call it Traton Group, to underscore its independence. The next steps will follow shortly. Going forward, procurement and Volkswagen components will be managed as one organizational function that safeguards synergies and improves our make or buy decision-making. From January 2019 onwards, Volkswagen Components will become an independent corporate entity under the roof of Volkswagen AG. This is how we are laying the foundation for more efficiency, flexibility, and for our group component being ready for the future with its 56 factories all over the globe and more than 80,000 employees worldwide. Second important point, we are entering groundbreaking alliances. Audi has agreed a far-reaching partnership with Hyundai for fuel cell technology. Together with Ford, we are exploring a strategic alliance with very promising potential for both sides. For our light commercial vehicles alone, we anticipate synergies above 400 million euros in the medium term. We expect to announce further details by the end of this year. And Volkswagen will become the largest shareholder of QuantumScape. Our $100 million investment is a key building block of the group battery strategy. One of the long-term targets is to establish a production site for solid-state batteries by 2025, and most probably in Europe, probably in Germany. We also initiated important projects in the different regions. We started the India 2.0 project. Skoda will assume or assumes overall responsibility for the group for India. Up until 2021, we're planning to invest about 1 billion euros for a cross-brand model drive in the subcompact segment based on the MQB-A0 platform. Through stricter regulation requirements in India, we are offered new opportunities there. The turnaround in South America is on the right track with new products tailored to the market, such as the Volkswagen Polo or the Virtus or the T-Cross, based on MQB. For China, we adopted a new product and technology drive focusing on compact e-vehicles. Together with our joint venture partners, we want to spend about 15 billion up until 2022 for future-oriented technologies. We presented the first electric vehicle with our new partner JAC, and the decision has been taken for SEAT to return to the Chinese market. I outlined to you the new decentralized group structure in mid-April. We have now finalized this new structure, and most of it has been implemented already. We are spreading management responsibility inside the group across more shoulders. For example, production now is the executive responsibility of Porsche CEO. The structure and working methods for the volume, premium, and sport and luxury brand groups has been defined and is already put into practice. As announced, we have in the meantime also redefined the regional responsibilities for the brands, and we are starting to fight red tape also at headquarters. Expenditure for group steering is to decrease significantly in the coming years. The Group Board of Management will focus on overarching strategic issues. In the brand groups, we are focusing on strong and independent brands steered by a lean group. Our leadership principle, based on maximum subsidiarity, strengthens management's accountability. We implemented the new structure in all areas on the 1st of July. New key functions for vehicle IT and multi-brand strategy were set up in my division. The target is to step up the pace of digitalization, and we want to leverage synergies between the brand groups in a more systematic way. Another side to Volkswagen's renewal involves strengthening our personnel base. Stefan Sommer will become the new group board member for procurement and component on September 1st. Markus Dissmann will become a member of the Volkswagen Group Board of Management as soon as possible. Both rank among the most experienced and distinguished managers in the automotive industry, and they are acknowledged technical experts. We are delighted to look forward to this new strengthening. It's part of the leadership renewal process at Volkswagen, which began 3 years ago. Outside expertise will help us also because due to the diesel crisis, in particular in technical development, We lost board members and thus a lot of specialist expertise. We are now rebuilding this expertise, and we are deliberately recruiting fresh people from outside of our company. But we're also recruiting from the inside. I'm happy to say that Thomas Sedran, former head of group strategy, will become CEO of the Volkswagen Commercial Vehicles brand as of September 1st. We have also appointed Chief Operating Officer of the Volkswagen brand. I'm delighted that Ralf Brandstetter will be steering operations at Volkswagen. He's got a lot of corporate know-how and know-how from the automotive industry. This is why he is the ideal person to strengthen us. Ladies and gentlemen, we are stepping on the gas. We need to answer pressing questions as regards the future of mobility. I'll come back to that in a minute, but first Frank Witter will give you the details of our half-year results. Frank, please.
Good morning, ladies and gentlemen. I bid you welcome from my side as well. I may say that I've had more difficult appearances in this role. As you're aware, since the publication this morning, our figures concerning the first half of the year look good indeed. And we did expect this. I'll focus on just a few slides which are particularly important today. It's about explaining the strategic dimension of our lineup and to have enough time for the Q&A. Sales is always the basis of our income statement. Over 4 billion, this is increased 3.5%. This is mainly due to the fact that we're selling more cars. An effect of 4 billion is included in these figures. In the mix, as you know, from the first quarter, we've been developing well. We are rolling out more SUVs. That's a main driver, more than 1 billion in positive contributions here. Commercial vehicles, likewise, as was indicated in the first quarter, have been trending very well in the strong European environment and financial services, 0.7 billion positive contribution. However, the negative contributions, more than 3 billion negative exchange rate effects to be factored in here. So on the sales, on the revenue side, we are quite satisfied with the trend development. There are gaps in this chart here. When looking at the overall picture, gaps means that something's been added. Looking at operating profit and margin both, we see that for the first half of this financial year, compared year on year with the previous one, we can say, as Herbert Dies alluded to, that the volume mix and price developments have been positive, which was one of the main drivers with more than 1 billion in operating profit. Product costs, we've made headway here, and commercial vehicles at 200 million more made their contribution. And when it comes to fixed costs, there was a rise in terms of the investments, particularly capex in our product development, the rise from 8.9 to 9.8. That is a good trend, almost 10 billion. That is a record figure for us in the group. And this is likewise reflected in the margins. Now, about the however part of things, this year, again, we've had to digest special items which were unplanned. 1.6 billion comprised of two components. This is the 1 billion because of the Brunswick court case, the non-compliance issue, and also defense in court, another reserve allocation shown here. The 1 billion has had its effect on liquidity in June. In operating profit, as you can see, this has left its marks, as with the margins. One very important point for the entire community, which we'll have here this afternoon, both the analysts and the investors will be informed. They say, what about your liquidity and cash flow? And here again, we're pleased to report good figures. However, you're aware that this is particularly important for us because we continue to have high outflows from the diesel issue. The peak last year at more than 16 billion, and this year we'll again have 5.2 around about 1 billion in cash outflow, the 1 billion being factored in. This rise from the 31st of December over that figure is the 3 billion in net cash flow, which we had in terms of liquidity that we've been able to generate and hold within the company. And as you're surely aware, we've issued a hybrid note which had a positive impact on equity at 2.7 billion. And we also had 2 billion in dividend payouts, explaining the difference between the 22.4 and the 26.3. On the liquidity side of things, we're pleased to report a sound foundation, a good foundation. Looking at the group, of course, the group is the sum total aggregated from the different brands and business fields. I'll not focus on every detail. Volume, mix, price, and product costs have been the drivers, and those have been the drivers behind the figures characterizing our brand as well. I'll focus on just a few figures. Naturally, everyone's looking at VW passenger cars. That's clear. The Pact for the Future has established a future-proofing program, which by 2020 will bring us onto a level where the earnings will be good. At 5% margins, we're on a good trajectory, and we'd already announced that the second half of the year would be more of an uphill battle because of the economic framework conditions and the WLTP testing conditions. Audi, good results at almost 9% margin, almost 2.8 billion euros. You know, it's like a record. Skoda, top results for a volume brand at 9% year-to-date on the 30th of June. That, of course, is a particular achievement driven as well by a great product portfolio and very strong markets indeed in Europe, which contribute to this. Seat used to be a worrying cause. Where in the margin, here we're not entirely happy. You can see it here at 63.1%, but they're offering a good portfolio. Bentley, not just in the first half of the year, 80 million minus. They're going to face a difficult year. That's foreseeable. There's a model changeover to the Continental, which had to be postponed, this being a main driver of the difficult situation for Bentley and the charges borne by the group. As a consequence, we're working under high pressure to achieve this. It's great fun to present the Porsche figures. Time and again, the colleagues will do that in more detail, but 18% increased margin, 2% operating profits, that's a very strong result in the first half of the year. And here again, in the second half of the year, we'll see more volatility. Surely, Volkswagen commercial vehicles show a record. The light commercial vehicles, this margin has totally been unheard of. On the volume side and on the cost side, they've been working successfully. You know, Scania is on a good trajectory. The colleagues in Europe are very well on the trajectory from 18 to a double digit at 10.5. Operating margin development here. Volkswagen MAN, commercial vehicles, again, a positive trend from 3.6 to 4.4% margin. For a long time, we had charges arising from operations in Brazil, and I may announce that comprised in the MAN commercial vehicles, again, we've shown that we are making a profit again. 2% return on sales is not quite where we want to be. However, Brazil is no longer a loss-running market. In these figures, power engineering, difficult conditions for the industry as a whole. This can be illustrated and shown, although at around about 4% we're still earning money here. The underlyings, this is our aggregation line item, where we factor in all the internal settlements and the neutralizing the purchase price allocation from earlier investments comprised in that as well. This being a volatile line indeed here, as it also comprises the internal charges and settlements and contributions. Financial services on a very stable trajectory, a pillar of supporting our operations, but also generating tremendous earnings. The main factors impacting or contributing to these 9.8 billion, here everyone is looking at what happened in China. In China, we have a proportionate operating profit of 12.3 billion. That is an increase of 9% roundabout, and that corresponds to a margin of 15%. In these figures, please do bear in mind the two main effects included. Over the first 5 months last year, we had tremendous problems on the Audi side. Fortunately, during 2017, this was overcome so that we now look at a fairly weak basis for the development of our earnings. It was a good year, nevertheless, because we had a weak renminbi, which, shown as a euro result, had an impact here. So the plus 9% is really a very good achievement in the light of these trends and developments. Earlier than many others, we started discussing WLTP conditions. This goes back several months where people said, we've never heard of this. What does that mean? WLTP, why were we so early in addressing this new challenge? It's a new test cycle for exhaust emissions. And this is to do with a lot of additional R&D activity that has to be grasped by way of grasping the nettle. With the same resources, the same people that used to work to justify customer expectations in terms of being compliant in terms of exhaust emission figures, and the hurdle to be jumped here, in addition to the WLTP cycle challenges, was higher, more exacting than for others. And looking at this from a financial point of view, where does this impact our figures? Not where we look at the entire offer being available to customers. We're losing sales on this side and deliveries. And if I can't offer the car in that particular configuration to customers, sometimes I have to add more money for the transaction, basically put it in the glove box to incentivize these sales. So that at the end of the day, as we expected and announced very early on in the second half of the year, there will be a very unusual level of volatility that we'll see in production, for instance. You're aware that on some points we had to close production, we had additional shifts run, so that will be a wild mix of individual impacts, but we'll produce cars ahead of time within the framework allotted to us by the legislator to then have the stock on hand and the inventory to generate more WLTP variants which have been homologated to be able to feed them into our sales pipelines. In the second half of the year, when it comes to sales, the operating profit, sales revenue, operating profit and cash flow, we're trying to compensate for this volatility generated by WLTP. Despite these difficult conditions, we remain confident to comply with our year's outlook. To meet that outlook, deliveries to customers, despite these particular challenges, we're expecting to be moderately over the prior year, 2017's figures, 10.7 million cars delivered then. For the sales, I've shown the half of the year. Around about 5% is our expectations for sales revenues to increase over the previous years. And what happens to operating return on sales? 6.5 to 7.5 group operating return on sales before special items. This is the outlook which we maintain, despite having to indicate that the second half of the year will be a difficult one. This brings me to the end of my contribution, and I'll hand over to Herbert Dies for the second half of his remarks.
Ja, danke, Frank.
Thank you, Frank. The half-year results of the Volkswagen Group are really pleasant. We are confirming our outlook before special items for this year, but of course we cannot and must not rest on our laurels here. In the medium term, we are faced with great challenges and we have to make great efforts. We expect some tailwind in the second half of the year by continuing our model drive. The new SUVs that were launched in 2017 are now seeing their first full year, and they will be rolled out to further markets. The products are very well received. In total, our group passenger car brands in 2018 will see the debuts of more than 70 new models for customers, include novelties like the new Audi Q8 and compact Volkswagen SUVs for China. And there will also be important successor models like the Volkswagen Touareg or the Audi A6. Risks include geopolitical uncertainties, volatile exchange rates, and the consequences of the diesel crisis. We are pleased that the trade dispute between the United States and Europe seems to be easing somewhat. Nonetheless, protectionist tendencies are escalating worldwide. The biggest volume and earnings risk, Frank Witter has touched upon the details, comes for Volkswagen due to the ongoing changeover to the WLTP test procedure. As soon as we were able to, through securing capacities, test beds and technical facilities, we began preparing for the extremely short adjustment period for the introduction of the new regulation on September 1st. Managing the technical side of the diesel crisis, as Frank Witter alluded to, meant extra efforts and resources. The more complex measurements now happen according to a coordinated cross-brand schedule for our group. Also, due to the wide variety of model variants, this is a tremendous challenge for our group. Test procedures for each of our 260-plus engine gearbox variants is much more elaborate. On top of that, there are external factors, such as the availability of technical services or the capacities at the relevant approval authorities also play a role. The result of all of this is that there will be bottlenecks for certain model variants between August and October, and this will have impact on capacity utilization at our plants, so there will be closure days at our sites during this period. We're doing everything we can in order to limit the risks and unblock the bottlenecks as quickly as possible. We expressly confirm our delivery targets for the full year. One thing, however, is clear. This will be a tremendous task for the second half of the year, particularly on the margin side. Ladies and gentlemen, our group strategy 2025 is a viable plan for the future that provides the right priorities. The brands have used this as their guideline and developed their strategies accordingly. In the further process regarding our strategy, we will need to make adjustments here and there, but the general direction is the right one. Our financial targets are defined in our planning. Our goals are ambitious, in particular in the years 2019 and 2020. We will have to do a lot in order to reach our goals. Throughout our industry, the pressure on margins is growing. On the one hand, we have to invest a great deal of money and resources in order to meet CO2 targets. Thus, we continue to invest in optimizing our internal combustion engines. On the other hand, we are making significant upfront investment in e-mobility and digitalization. Planned returns for electric vehicles will not reach the same level in the early stages as those for conventional ones, and establishing a necessary charging infrastructure, where we are one of the players, will also cost some money. With a look at our next planning round, we are faced with quite a lot of challenges. We're working hard on the planning, and as usual, we will finalize our planning in November. Looking ahead, my goal remains the same. I want to make the whole group and all our brands significantly more efficient, productive, and profitable. So we will continue to set very ambitious goals for ourselves. We are currently in an intensive discussion about how to reduce the complexity of our product portfolio and the number of variants without this leading to tangible disadvantages for customers. This will also help us to handle the ever more complex approval regulations, such as the requirements from WLTP or RDE. As a major volume car maker, production at our 122 plants worldwide is one of the biggest levers for more efficiency. Volkswagen, over the last few decades, has become a very product-oriented company. This strong product focus, of course, is something quite positive, because very often it leads to superior vehicles compared to those of the competition. We will keep this strength. We will not change it. However, sometimes it went to the detriment of efficiency and returns. For example, when changes were made to the vehicles at the very last minute, and because we had vehicle development that sometimes was not geared to optimized production. In particular, in the volume brands, we have to move Volkswagen to focus more on production and process orientation without losing sight of our superior product substance that has made us as successful as we are. For our company, this is a shift in paradigms, and I'm delighted that we have Oliver Blume, an acknowledged production expert at the group board management, who shares this view. The initial signs are promising. Together with the brands, we want to work with everyone to have 30% greater efficiency at all plants, with factory costs, with productivity and investment. And we want to do this by 2025. And we also want to improve the environmental KPIs at our sites by up to 50%. A competent, globally leading production network is one of our biggest levers for increasing the value in the Volkswagen Group. We will continue to offer outstanding cars, but production processes and standards will become a yardstick for product development and design. And in production, reducing complexity is also an important lever. In some areas, competition is ahead of us, and this is something which we intend to change and which we will change. So this is one reason, among others, why we are now taking an even closer look at our production network to see which models can be produced best in certain locations. Going forward, more sites will be building vehicles for several brands. One example, just now in Wolfsburg, the Seat Tarraco production is being started, and I'm particularly pleased that our main plant in Wolfsburg has just won the first Lean Production Award. This shows that our production is heading into the right direction. Seat is also a good example for how we are working in the volume brand group on positioning and developing the individual brands. The aim is to establish a clearly differentiated, unmistakable brand profile for Volkswagen, for Skoda, for Seat, and for Volkswagen commercial vehicles. This is our basis to decide which brand and which of the product is in contest, in which price segment and markets. And thus we make sure that our brands do not vie with each other, but first and foremost with our competitors. Seat has shown a rather impressive development in recent years, thanks to convincing products with technology from the group's modular toolkits. The brand has put all of the years of crisis behind it. In the first half year, Seat delivered almost 350,000 cars and increased its operating profit by over 60% to 212 million euros. Today, Seat has a much better product mix compared to just a few years ago and has the youngest customers in the group network. But I believe that this brand has still far more potential. The Cupra models and the Cupra sub-brand show the way to go. Young, sporty, desirable, and emotional. This is how we are positioning, how we're moving Seat upwards, also price-wise, where Alfa Romeo in brand perception is today. The decision for the Seat brand to re-enter the Chinese market is a further building block in order to have profitable growth. Also, Seat has taken over regional responsibility for North Africa, where we see good market opportunities in the future. Profitability, efficiency, and future viability. This is what the Volkswagen brand's Pact for the Future, concluded in November 2016, is about. The pact has brought forward good results. Operating returns on sales of the brand has improved. In the first half year, it was at 5% before special items. Apart from the successful start of the program, this is, of course, also due to a positive market environment and the improved earnings in the regions. I would like to say thank you to the Works Council and to all of the employees for the numerous improvements here at the sites in Lower Saxony as well. The conditions for our business are changing very fast. Competition is getting tougher. Regulatory framework is becoming even more demanding. And in order to remain competitive, Volkswagen needs further efforts, in particular for the time after 2020. Also because activities that we need to do for topics like autonomous driving and because the digital initiatives will grow. The success of the Pact for the Future has shown that Volkswagen is capable of change. Ladies and gentlemen, new and aggressive competitors from China and mainly from the west coast of the United States are moving into our business. They might not be as good at building cars as we are. However, they can do other things better. Software development, digital networking, creating a seamless digital ecosystem that moves the customer's lifestyle right into the car. These are the issues that will define the car of tomorrow, and these are the issues that we are tackling systematically now. We need a massive build-up of know-how, new partnerships and acquisitions. Currently, we are working on how we will strengthen our efforts together with external partners. We want to build up a group-wide one digital platform that offers customers our digital services across the whole range of models. I expect we will have decisions on this project in the second half of the year, as well as in the area of mobility as a service. The target is to massively step up our software expertise with global presence and with new partnerships. Ladies and gentlemen, as a group, till the end of 2022, we will have spent more than 34 billion euros for the big topics of the future, for e-mobility, for autonomous driving, for new mobility services, and for digitalization of our vehicles and factories. This year and next year, we will lay the foundations for e-mobility. Up until 2020, we will see 50 new electric models from the Volkswagen Group on the market. In a couple of weeks, Audi e-tron will start. Next year, we'll see the Porsche Taycan from Zuffenhausen, and with the Volkswagen ID from Zwickau, we want to open up the Golf class for the electric era. Preparations for this are in full swing. With the IDR Pikes Peak, we have shown just what is inside this type of technology. Volkswagen, with a electric car, has shown the fastest time in the history of this legendary hill climb at Pikes Peak. This history spans more than 100 years, and this with an all-electric car. We're also hard at work on another topic, the battery cell, and not just in Salzgitter. In the long run, we cannot allow ourselves to be dependent on a few Asian manufacturers. That is one of the reasons why Volkswagen increased its stake in QuantumScape and set up a new joint venture. The solid-state battery technology offers great opportunities in the future, and our goal is to scale up this technology to an industrial level. Ladies and gentlemen, the future of the car is an electric, a digital, and a connected one. Volkswagen will be a key player in this future. We will shape this future. Our strategy 2025 is a viable one. However, for our target to become a leading supplier of global mobility and to stay that way, in many areas we will have to become faster. In particular, when we are setting up new digital competences, we must not lose time. This is our ambition and my ambition. I want Volkswagen to have long-term success and to be viable and sustainable in the future, also in the new area, in the new mobility era. We want to be efficient and profitable, innovative and customer-oriented, responsible and well respected. This is what we stand for, and this is what we are working towards. And now I'm looking forward to your questions. Thank you.
So, die Fragen, wir beginnen mit
Right, we are ready to take your questions. Ed Taylor, please.
Edward Taylor von Reuters.
Edward Taylor for Reuters. Sergio Vacchione died recently. He's one of the proponents of transformational deals in the car industry, in the motor industry, and he's always said economies of scale could be achieved by becoming even larger companies or groups. VW doesn't seem to have had such a great interest in transformational deals. Mr. Dies, will that be alliances, software and digitalizing companies like ride-hailing? What will be the future for these things, including your portfolios and possible mergers with conventional car makers and these digital companies? The answer? The big challenge is, the next decade, next 20 years, the transformation in our industry, the motor industry, to have direct customer contact, addressing customers directly as you're used to from other companies. It is going to radically transform our industry. And this is the key challenge, managing this transformation. And this is the centerpiece of our strategy. Partnerships are very important indeed. I'm looking forward to the already started Ford partnership, which will improve our competitiveness, particularly when it comes to small and light commercial vehicles. It makes sense there. We are leveraging more economies of scale here, and I wouldn't exclude this in individual areas. Cooperating, dovetailing the capital structure is not necessarily important, investing mutually, but outside the conventional car industry, surely partnerships are interesting. Consolidation will surely take place, but this is not the first priority on our minds. I wouldn't exclude that we could round off some of the brands or other topics through this sort of activities, but it's not going to be the core. Mr. Schwarz, please, from Reuters. I have 3 points I'd like to ask. The solid-state battery has made me perk up. QuantumScape, you've mentioned that. In your text, you're talking about the battery in the beginning and at the end of the cells. What are you planning? With QuantumScape, will you be making battery cells as well? And the second point, production. You've increased production in the second quarter quite clearly. What cars are these that are made? Are these the ones which we'll see on the BER airport? Have you produced cars to put them in inventory, to be WLTP certifiable, but not yet having received the homologation? Will they be fed into the dealership organization? And then the third point, considering the pact for the future, the Zukunftspakt, the investments and the efforts to cater to future-oriented topics, does that indicate that additional efforts are needed? You've indicated that. Are you planning the Pact for the Future 2.0, a second version of it or installment? Well, for the solid-state battery, it's indeed about the cells. Solid-state cells, compared to today's lithium-ion technology, which is well known and being rolled out, offer 25% more energy capacity per unit. So safety is a leverage as well. There is no liquid electrolyte, so catching fire is not so much of an issue. It's safer. And here, from our point of view, we see this as the only true midterm trajectory towards a post-lithium-ion battery technology. We are already holding a stake in QuantumScape, and we've seen clear advances over the last months in terms of temperature resistance of batteries and reliability. Production might start in the year 2022 or 23. We will take part in this investment. We'll build a pilot manufacturing site together with QuantumScape for the production of this cell. And then by 2025, we are envisaging large-scale production. And this depends on the results investigating this and the production technology. A further development of lithium-ion technology is driven forward in this manner for the group, upping the speed of development, accelerating that, as it were, as well. Then the second question related to production and building inventory for the Q2, for the second quarter. This is mainly to do with the fact that we need to supply our dealership organization. We've built only cars where we are sure that we'll be able to sell them at this sort of volume. And there will be cars over August and September. These cars will have to be stored, and you will be able to see them as they are sitting in inventory because certification has not been completed. And there are no risks for these cars in certification. It's simply a matter of time, getting the homologation, the certification soon enough and quickly enough. And then in the third quarter and fourth quarter, they will be successively delivered to the dealership organization. Those are cars in Europe which can be homologated, and they're meant to help us bridge the difficult situation over the next couple of months. The Pact for the Future, is it on a good trajectory? Has it set off to a successful start? Yes, it has. We simply see that due to the additional challenges we see on the horizon, additional technology has to be prepared for the cars of the future. We need to put an extra effort into restructuring, realigning the group. We want leaner admin, which we have to discuss with the labor representatives naturally, and the restructuring and realignment of component manufacturing and of our vehicle production has to be accelerated further. Over the next weeks and months, there will be talks on this. In this rhythm that we've set off in, with the labor representatives, we've achieved a very constructive basis and foundation, and we'll continue with this sort of pace. And every 2 years, that's our current rhythm, reconsidering whether we are on the right trajectory, whether we'll have to realign our focus, and this is a good point in time to do that. The next question is Max Hegler.
Der genau vor Ihnen sitzt.
He's sitting right in front of you. Well, thank you. Good morning. I have 3 questions. Leasing and the cars coming back from leasing and diesel issue. Is that a major challenge for Volkswagen and your dealership organization, your sales organization? That could be an issue, you know, the write-offs of cars that come in. We hear of increased problems here, and diesel cars even. Your colleague, Mr. Zetsche, stated last week in an annoyed manner, reacting to the many questions on hardware and retrofitting, he said that is over and done with, it's finished, and the local communities, the courts, see that in a different light. What's your take of this in the group? And the third question on this topic, do you still feel that by summer or autumn you'll be on track, having completed everything you wanted to July or September? Well, starting with the leasing question, we'll hear, and Dr. Diesel on hardware retrofitting and the summer and autumn 2018. Well, let's start on diesel, says Mr. Witter. It's no secret that the proportion of diesel cars in new car sales has decreased. For EU5, we're talking just under 40%. We were at clearly above 50%. My favorite market is Italian cars with around about 50%. The question did crop up, and we did consider that. What does it mean? What's the impact on resale values? The vehicles that we have on our books, but also for the sales organization and customers. We found for last year that there has been a reduction on resale values. Looking at the DAT figures for Germany, Germany and the UK are the 2 markets where the repercussions were most clearly felt. But the resale values didn't fall off the side of a cliff. We can put it like that. We have to distinguish by model. 2%, 2.5%. That's a order of magnitude. That's one side of the coin. Then looking at things, since people continue to buy used cars, the petrol car resale values have gone up. If you've got a large and diversified portfolio, the effects overall aren't that dramatic. Financial services, I know that from my earlier responsibility field, we always had a good approach for resale values. We've made provisions and allocated things to reserves, and as of now, we do observe these effects. However, this is not piling up to become a dramatic problem as some people have been expecting. Surely not. But surely we need to support the sales organization, particularly EU5, you know, import bans. That is surely a big lever, particularly for Germany, and also something that will carry the day. If we solve that together with customers and politicians, there are initiatives on the way to deal with this. So I cannot say all's well, and we're over that. We've got to fight for every used car that has a diesel. But this very conservative and critical expectations of 2 years ago, those have not come true in the end.
And maybe I can add to this, we're at 40% diesel, we were below, so the diesel share is actually growing again. That's a very positive signal, I think, also because electric drives are not a full replacement for diesel cars in many segments, in particular for large vehicles with high mileage going long distances. The diesel will be the most efficient and most environmentally friendly type of drive. This is why I like to see the recovery diesel with a new emission technology. It will become clearly cleaner, and in 5 or 10 years' time, maybe in 15, 20 years' time, still will play a decisive role, in particular with larger vehicles, with more annual mileage, and that go longer distances. The electric vehicles will not be able to replace this segment. Now, on hardware retrofits, well, I can understand Mr. Setsche. I am a bit relaxed about it because it's not a very good thing. The hardware retrofits had a very nice cosmetic packaging, but they're very elaborate. I can't imagine that a customer would accept to lose his spare tire, that people drill holes into their car, that on the holidays they have to move out their package, their suitcases in order to fill AdBlue. They don't get the ammonium smell out of the car over the life cycle. And if you think about consumption increasing, and that this can earliest happen in 2 or 3 years' time, and you would have to make quality assurance for that, it doesn't make a lot of sense. And also, we are working on many points in many areas, in many towns. Today or yesterday, I think we had a meeting in Hanover where we present simulation results, and our simulation calculations show that this topic of NOx at the neuralgic areas is clearly more relaxed, and that's true for this year and next year as well. So in 2021, we probably will leave behind this because of the better and improved mix of diesel cars in the towns. We think this can be managed. I think we are about to do our bit, and yesterday we have taken a look at it together. The things that we agreed to in the diesel summit, we will do 3.8 million cars will get software updates. All in all, we've made our contribution to the diesel fund, which was supposed to lead to more robust measures and infrastructure measures being carried out in towns. 210,000 old diesels were taken out of circulation buyers, and when the other manufacturers do this, and the German manufacturers are committed to do this, then I think this problem will be solved quickly, and this problematic discussion about the diesel, which we need in the future, hopefully, will be able to leave that behind in the mid-run. Summer, autumn preparation of this stage, we've dealt with it intensively even last year. We are taking a look at it almost every week in the board, but we have to see that our development departments at Audi and Volkswagen simply are working at the limits of what they can do. That was the case the last few years and months. We've expanded quite a lot. We included additional resources. We bought in additional resources. We have a number of external companies that work. Our test bench capacities are working in 3-shift operation. We did a lot of agreements with the Works Council. We do everything we can, but we have to say that Volkswagen, compared to our competitors, due to handling the diesel crisis, we simply have a bit of a lag. We'll balance this out. Our teams are working towards it, and I believe in September, October, we'll be able to look forward. This is a topic which we will have every single year. Never before did we have it in the automotive industry. Now we had new regulations every year. We have RDE that will be getting more stringent year on year, so that we really have to re-register our entire vehicle fleet. So we have to be prepared in structural terms for what's coming. I think both teams are well on their way. And you are commenting about it yourself. The burden for diesel is quite substantial. The question was in a different direction. Maybe you can put more flesh on the bones. Thank you. That was very interesting, Mr. Dies. It's an important topic. It's interesting. But what I meant about, what I was talking about was summer and autumn 2015 and your debate or your role starting in July. Answer, well, I can comment on this then. I have a very good feeling. I reflected very often about what was happening there, and I've worked through it. I was asked about this. From today's point of view, I don't know what I could have done better. I've given a great performance there, and I think that in the next weeks and months, this will be seen by the public as well. I'm at peace with myself. The next question, Mr. Krug, Mr. Hapke, and then Ms. Janssen. Mr. Krug in the first row here. Henning Krug, Hamburg Automobilwoche. Dr. Dies, when you are talking about solid-state batteries, you are talking about setting up a production site. This is your long-term goal. And then, almost unaudible, you said it will probably happen, and then maybe you corrected yourself, or you said probably under certain circumstances. So what? Is it probable, or will it happen under certain circumstances? And next question, when, with your colleagues on the Group Board of Management, will you come up with the decision, and which region, provided this is a positive decision, could hope for this? Maybe even the Wolfsburg-Salzgitter region? Second is a technical question. When will Lamborghini move to the sports and luxury group of brands, and what's the central idea of moving it out of the Audi area, which that would mean where the Urus and the Aventador have lots of similar ground with Audi models. That, and last question to you, Mr. Witter. Your colleague, Mr. Dies, talked about returns of e-cars compared to internal combustion engines. They will be rather low initially, and about new competitors from the west coast of the United States. Now, U.S. dealers, U.S. Volkswagen dealers, your core Volkswagen passenger car brand, say that a couple of thousand e-Golf units, for which in the new and in the old world there are lots of interested parties, but not a lot of cars, that they had gone to European markets. So they went from U.S. markets over to Europe and will also come to Germany. We now assume, Mr. Witter, that with an e-Golf here or somewhere else in Europe, you will earn far more money than you would have earned it with the United States. Would that be a correct assumption? Thank you. Answer. Right, start with a solid-state battery. Why are we working on it? Well, because we are in a very early pilot stage, and so far no evidence has been given that we can actually go into mass production. But first attempts are so good, cycle is good, physical properties are there, and there are certain ideas as to how we could put it on an industrial scale production, so that now is the time to think about it. And we have decided to step up our share in QuantumScape because there are many activities on solid-state batteries, but there we think this approach with ceramic separators has been a rather technology difficult thing. We are now in a position to produce very thin ceramic parts that work. So now for the first time we can say this might well work. If we take it that this positive development goes on, cycles are firm, ceramic foil has to be produced in a larger scale, it needs to be moved to form together to form cells, then we can imagine that in 2023 we could go to pilot production, in 24, 25 we could start with normal production runs of rather competitive cells. Since we see this to be the most promising technology, we moved our money into this basket and we're going with it. Of course, I mean, it's got a good assessment, but it is a startup, and not all of the startups go the way of production run. We'll do everything so that this works. We'll move in our know-how that we have. We have a joint venture with QuantumScape for pilot production, and later on we'll have a small-scale production run. From what we think about today, we'll do it in Europe or Germany, but we have a bit of time to fix the production site earliest. This is necessary, and we can be safe to say that it works. And in the next 2 or 3 years, we'll be able to confirm this. Now, on sports and luxury group, why should they go to the Porsche group? Well, we have to say that Audi, as regards the worldwide retail structure and the technology, has a very clear position compared to the other premium competitors from the south, BMW and Daimler, whereas Porsche, by way of tradition, has been in a segment together with Bentley, which fulfills customer requirements that go beyond it. Cars beyond the 200,000 euro mark and even higher are there, and we have synergies in customer contact that Audi does not have. It's a different customer very often. Those are customers that are collecting cars. Many customers have more than one of these luxury cars in their portfolio, so there are synergies in sales, and the other synergies are in performance. Those are cars, or many of the cars, beyond 500, 600 horsepower, torques between 800, 900 Newton meters. So drive trains have a rather high synergy, and the toolkits in the future will rather be seen in the area of Porsche, Bentley and Lamborghini, which is why we have not yet stated as to when it will be reallocated. It will be moving into the next car generations. We see more synergies on the Porsche side than we have them on the Audi side, and on top, Audi will probably be in an even better position to focus on the direct competitors in the south. Those were the main ideas. The ego of this was more a question to you.
I'll be happy to take up your question, but just by way of complementing the battery topic, Dr. Dies has already explained that this is about solid-state cells. Further investment is packaged up in a joint venture for small and pilot series production to do a pilot skid. The other discussion relates mainly to lithium-ion technology. And as you're probably aware, in Salzgitter, we've established a center of excellence in terms of the technology we want and must be at eye level with the suppliers. Only then can we take these strategically central decisions right. This is why we are establishing this pilot production in Salzgitter, pilot production and the Center of Competence and Excellence. But when and how we'll invest has not been decided yet, and there is nothing we can add to that. Just a further differentiation into solid-state and lithium-ion batteries. Well, the return on invest for the electric cars, what you can buy today in terms of electric cars does not generate a great margin, particularly for finance guys. This is not great. You can look at Teslas and all the others because the volumes are homeopathic, not just very small. And in terms of the cost per kilowatt hour, these costs for the batteries are just too high as of today. And now let me translate this into what Dr. Dies listed. As we enter the new age, starting with Audi and the MEB cars being made from 2020 in Zwickau, and we'll have a leapfrog advancement in terms of margins, particularly since the costs per kilowatt hour will have come down by then. And we're finally talking volume, despite the fact that entering the mass production will not happen overnight. So the margin situation for the next car generation will improve. Surely, however, on average, it's not going to be on a par with today's IC engines. So we've got a deterioration of the situation in our product mix, but we're much better than what you see in electric cars today in terms of margins. And for the generation of the e-Golf, we are on the limit. Not much more is possible to achieve here. So surely there will be many markets which are not happy with what we can provide here in terms of the e-Golf. We cannot change that now because we're already in the process of preparing for the MEB. Cars, particularly Audi and Porsche, are on the last laps to finalize their great new models. So our American colleagues, if they've outed themselves as a fan of an e-Golf, I've got to ask you to bear with us. It's going to take a little while. I have three questions. One is a little more extensive on the exhaust emission test. Can you tell us how many of the 260 engine and gearbox variants have been certified, and when the last of these combinations will be certified, by when? And the topic means that customers ordering a car don't know when it will be supplied and what this will have cost you by then. Obviously, you're expecting much lower margins for the second half, so you would probably have corrected your outlook compared on the basis of the first half of the year if this hadn't occurred. And then you already addressed the billions in fines. Local communities in Lower Saxony are afraid that their company tax will be impacted. Will that lead to a reduction in company tax having to be paid, or is VW not going to use it for tax reductions, tax returns? And on the basis of the diesel scandal, you've already listed costs in your balance sheet. How much has the diesel fraud cost you as of today? Because I've lost track, considering all the different billion amounts. Well, on your first question, Mr. Hapke, says Mr. Dies, many of the engine and gearbox combinations are under development, and those are figures that change on a bi-weekly basis. Over a 3-month period, we're talking 30 to 50% less or fewer variants of engine transmission combinations, depending on the model, and after this period, we'll be close to full availability. There will be just a few of these combinations which will be taken out of the program for longer periods. Of course, we need some time to, or we are using that time to cull some of the combinations of engines and gearbox and streamline our model portfolio. I'll not focus on these figures because these are very relevant in terms of the competitive situation, so we ask you to please be happy with what we can give you. Now, the second question, well, maybe another point on the WLTP, as we've explained in depth, in terms of operations, don't get me wrong, but in that light, not a lot of good things happen here. But just to give you a take on one, the spin-off, in this new structure for 3 years, VW passenger cars have massively restructured and reduced complexity. So we are in the process of structuring the brands in a lean manner, reducing complexity and the engine and gearbox variants. So WLTP increases the pressure to up the ante for what we've been doing for 3 years, for all the brands, even more, with more dedication. It's always the same bottleneck. We have to optimize costs further, and WLTP provides a tailwind motivating that. I don't want to talk the issue up, but reducing complexity is a central point. We have certain assumptions on the sales, and they're taken into account in the outlook. Operating margin, we've said 6.5% to 7.5%. There are things in that for additional incentives and sales promotion measures, and a certain volume risk. And the job across all brands, and also accompanied by the group, is to work against that pressure, and we remain confident that we can stay in this corridor. However, some volatility and risk is involved, imponderables. I can't tell you the exact figure, but it is a significant amount that's been allocated to provisions. At other points, the penalty part, or the fines, cannot be tax deducted. Other topics are being looked into currently, and we will. That is a given, and the expectation of the owners to comply, of course, with all laws and regulations that apply. This is our obligation. We have to do that, and this penalty or this fine of 1 billion has the fine component and other components as well that we can use, and we'll finalize that over the next days and weeks. But it's not unrealistic to assume that surely parts of this can be tax deducted, and if that can be done, then as a board, of course, we must do that. That's a given. And you're right. In terms of the diesel clock, you can lose track. This has been ticking since 2015. In sum total, we're talking 27.4 billion in special items from the diesel issue. And since we are talking in private, that's the official amount allocated to special items. However, diesel cost us a lot of strength, management capacity and resources, because we had to repair the cars. We had to come up with software and hardware solutions. We had legions of people and resources allocated, including the board level, to cover this huge, unfortunately, caused issue. And the factual effort required, of course, was much higher. That has to be diverted here. And the 27.4 billion, that's the special items which we've been taking into account since 2015, factored in. And this includes the charges which I addressed in WLTP earlier on. We probably addressed this topic earlier than competitors because we knew that in the technical and engineering departments we'd have to do both, one thing without neglecting the others. So the special item influences from the diesel issue have to be borne in mind. Ms. Janssen and then Mr. Dahl.
Maybe that's a good fit when we're talking about costs. In September, the MOOC proceedings happen in the upper court in Braunschweig. How do you see the opportunities for these to move that out of the way without it costing further billions? Well, on the legal position, I do not want to make a statement. Please understand it. People urgently asked us not to do that. Mr. Dahl. Maybe just to add, we continue to have the position that we have lived up to the information requirements by the capital market. That is and will continue to be our legal position. And so in our books, we have included this. We have it in our contingencies. Mr. Dahl, Welt. I have questions on WLTP. What I have not understood so far is this. It's an industry-wide problem, but how can there be these bottlenecks in testing at all? On the part of the industry and the part of Volkswagen, have you not been prepared at all? Or was it the case that authorities and politicians decided after this diesel problem, we will keep you uninformed and surprise you overnight? Because it's an industry-wide problem. The second question, WLTP is not valid worldwide, but in the whole of Europe. Does this mean that the Volkswagen Group and the brands involved outside of Europe pre-produce cars, and even if you don't have BR Berlin airports, you store them in other areas, and up until September, October, what could be the maximum number of cars that you have standing standing around. And the last question is, the outlook is giving a slight dampening effect. You can see it in the development on the share price. The ambitious margin targets that you have, Mr. Diess, that you talked about, Mr. Diess, how can you realize it next year when we see that WLTP might be going away as a problem, but there are more problematic measures. You have test more measures. You get more electric cars with less margin. So you would have to go to other areas and economize a lot or become ever so efficient in order to increase your margins. Thank you. Well, WLTP introduction. We are involved ourselves in this. From our point of view, this was gone through in haste with a bad preparation for emission changes. We have run-up times of between 2 or 3 years. Stipulations are done and coordinated at a European level. And shortly after the diesel crisis started, from my point of view, the introduction date of WLTP measurements was moved forward 1 year. And it is very difficult to prepare for it. It's a longer test procedure. You go higher speeds. The test cycle is twice as long, the permanence, the time, so you need to do more measurements. And what is new, you no longer have one type per engine gearbox variant. You have to show all the variations with air condition, without air condition, sliding roof, wide tires, smaller tires. So it's a multiplication of efforts that you have to do. It's a mass problem. You need more test benches, more capacities, more elaborate documentation that you have to present to the authorities. Technical problems are not that much. With the petrol engine, we have the particle filter, but basically it's an organizational and measurement problem in order to have a certification of all of the new test values. So the introduction was at least 1 or 1.5 years shorter than normal, so the authorities didn't have a lot of time to prepare. Building up capacities in the technical service area was difficult. Partly we were involved and helped out, and we talked to people to start up building up more capacities. And something else which is new, that all of the cars have to be homologated and re-registered over a span of 1 year. This was not the case before. You had to bring in new cars with a new homologation procedure, but this time is different. It will stay this way the next few years. We have to live up to this. There will be more work, more effort, and this will also lead to the fact that probably we'll take a clear look at some variants and think about it very clearly as to whether we want to go for them or not. I believe that we have to prepare adequately while we're worse than competitors, at least as regards availability numbers in the market. Well, this has to do with the fact that our engine development departments, the last 3 years, I think, have worked at their limits. We lost people in engine development, people that we had to transfer, people who were involved. We have lost in the accusations, we have lost technical competencies, and we have reapplied all the new 4-cylinder engines in Wolfsburg with Audi, all 6-cylinder engines. Concept-wise, we moved into the engines so that they fulfill the legal requirements. So therefore, you can't really reproach people because they are really doing everything they can. They do everything they can do, and we give support as best as we can. And in the next few months, I think we'll move beyond this, and next year we'll continue to be at the competitors' level. And at the same time, of course, we're doing everything in order not to lose too many cars in the dealerships and with customers, which is why we reserved some space to build up buffers. This is not going to be translated into millions of cars, small three-digit amount that can happen cars. And the cars won't stay there for a long period of time. They stay there for 3 or 2 weeks, and then they'll be delivered, and then a couple of new cars will come in. It's very well planned. The areas have been reserved. The last question, foreign cars for Europe. Yes, we have them. We have a couple of them that will be imported to Europe, and there That's true for our plant in Mexico, partly. There we are working on it. Cars fall under WLTP, not to the extent as happens in our European plants here. Yes, maybe I can talk about the margin. I do not have a screen showing me the share price, but before I talk about the strategic dimension, maybe I can talk about two other aspects. In the 9.8 billion, I think this also illustrates the growing quality of our results. Maybe you see two things. We have more or less the same primary development costs in the first half of year 18 versus 17. We have capitalized 400 million less, and that's quite a substantial number. And in the first half year of 2018, we had 100 million additional write-offs from formerly capitalized costs. It was all in all about 550 million. That's quite a substantial sum, which by way of additional quality that we achieved in 2018. Now on outlook and on the margins. In the last 3 years, I'm sure we weren't right in everything that we did, but we knew we didn't have a lot of trust after the diesel issue. In communication with the capital market and hopefully also in our communication vis-à-vis you, we have been quite open also as regards our own weak spot, Pact for the Future and the performance of Volkswagen passenger car brand, and we have talked about where we have to become better. At the Capital Markets Day in March 2017, we said quite clearly how this will look like up until 2020 and up until 2025, not just for us, but for the entire industry. What will be happening by way of changes? And one major aspect is this. As an industry, in order to have CO2 compliance from 2020 onwards, we will have to fulfill the more stringent requirements, which means we will have to use more money and put more technology into the car. And in how far we can hand this down to the market, that's something which we will have to give evidence of. So it's a clear block of burden. As to whether it's 100% or not, that will depend on competitors and on the discipline everyone's showing. That's one aspect. And the second one was alluded to. From 2020 onwards, in all of the units that we're selling, we have a major part or a bigger part of electric cars, which is good. We need them for CO2 compliance, but in the mix and profitability-wise, they are worse than the internal combustion engines. So when you take a look at the return on sales after 2020, it's a burden. It's helpful when we want to avoid CO2-related penalties, but as regards returns, it is a burden, which is why we on the Capital Markets Day said we think up until 2020 we'll get a return in the group of between 6.5 and 7.5%. In 2020, we will hopefully reap the fruits of the Pact for the Future of Volkswagen passenger car. And for 2025, we said at the same event, with this growing mix of electric cars, we think that we move this group to between 7 and 8%. At the Capital Markets Day, there was a bit of people weren't too happy about it. No one else said it. And we said, well, then address these specific questions with all the other OEMs. And at the end of the day, the conclusion was no one came back to us and say, it's only you have this. I think this is the reality. And we have been very transparent about it. We're working on it. Reduction of complexity is in it. The Pact for the Future of the passenger car brand of Volkswagen is in it. There are a couple of other brands that might have some additional things to do. We have to become better there. That's where the potential of the group lies. Despite of this environment that I have just given you the information about, we want to increase returns substantially. It's not an easy way, but we're doing it, and this is why we have our targets. And I think we can say that from 2015 onwards, when we have tried to regain trust, we have been fairly constant in delivering of what we said by way of targets and milestones. It wasn't simple in all of the cases, but it was essential for a company that had completely destroyed the goodwill and the trust. This is our way. We are not promising any type of utopian hockey stick results, but we promise that we will move forward this company to 2025, and this includes development costs and investment rates of 6% in 2020, and it's going to be quite an eventful planning round to 67, because this is something which we have to do, and this is how we started to work. Ladies and gentlemen, I have 3 requests for the floor, one Mr. Rauwald, one Mr. Hetzner, and one by Ms. Lohner, and Mr. Rauwald starts now.
Ja, guten Tag. Christoph Rauwald von Bloomberg.
Christoph Rauwald from Bloomberg. Mr. Dietz, in your speech you said that you're considering possible acquisition in terms of digitalization and software. Can you give us an idea what order of magnitude you are considering in terms of purchasing things, acquiring things? Then the Ford Alliance, you already addressed that, 400 million annual synergies. That sounds promising. Is it conceivable that you will join forces more closely in the passenger cars area with Ford? And then to Mr. Witter, you addressed the exchange rate effects. Can you remind us what the impact on the revenue you expect for the overall year, on the earnings for the overall year? Well, in terms of software competence, let me address it as follows. In cars, this is going to be of paramount importance. Customers will expect for cars to be controlled similar to smartphones today, so that they are in constant contact with the manufacturer, with the OEM, constant updating of services, new maps, new services. This is something we don't have currently. In programming software, cars, have lots of software. However, that comes with the control units from the suppliers, so that those are islands supplied by the suppliers. Our software architects say we want to separate soft and hardware. We want a hardware architecture in the car that can be then used with software stacks with different modules to be put in there. Software has a very low proportion of the value added. It's just the integration in terms of manufacturing depth that we offer. That will change. Software is going to be distinguished from hardware. The 70 control units you have in a optional extra equipped car today, Audi 8090 control units, even more, that will be reduced to just a few large computers, 2, 3, 4, maybe 5, plus additional functions, and the software modules will be then updated on this. So it's a structural change in the industry, so that we'll have to take the decisions, what software modules do we do? Because customers simply expect fast improvements and updates for vehicle properties and driving properties will be updated. That will be in a segmented manner, where we feel we have USPs in the market to update software safely to the car, or to shut the car down, take the software out, and then playing it back in. So that has to be discussed with the dealers. And then autonomous driving, where we want to have our USP and where we want to be in control, so that cooperation in software will relate to certain abilities in the automotive environment. Smaller topics, that's the short run. In the long run, a company such as Volkswagen needs to be able to make a large part of the software that you'll find in the car under their control. We have to have a very good understanding of the software and its architecture, not necessarily have to program everything ourselves. In the second half of the year, we'll start here. We'll not just have additions or acquisitions, we'll also have partnerships, updating software through the cloud. For instance, these are competences we don't currently have, and we need to invest here, do some capex to be able to acquire this competence and to build traditional technologies and to build on that. We're well placed. In Berlin, we have the software team, 500 to 600 people working here. That's continually growing, and this will be organic growth with individual smaller purchases. Then, of course, purchasing, things like Ford. Of course, you can think in larger terms. With the MQB, we have a lot of economies of scale. MQB is probably the best toolkit for conventional cars worldwide, and it's a huge scale. We're using it in China, Mexico, US, Europe, in all the markets. And these economies of scale will further scale up. We've got the economies of scale leverage. Some fields we are subcritical, light commercial vehicles, for instance. We're lagging behind our competitors and the economies of scale they have. Synergetic collaboration is an obvious choice. It's a no-brainer, as Ford has similar challenges. We collaborated with them in Latin America, Auto Latina, and in Europe as well. So in terms of the corporate culture, this went well. You know, with Ford, the substance of their commercial vehicles fits in very well with ours, and the business case is excellent. As we see today, which we are pursuing, I wouldn't rule out that we find more potential to make use of, but we first want to get this project up and running, and if then things occur to us, that can happen, but it's not a focus that we drive forward intentionally. The exchange rate effects was another question. Of course, it's crystal ball gazing. 6 to 5 months ago, when we were talking about 2018, a high three-digit million amount impacting our earnings in a negative manner. Now, with IFRS 9, you know that part of the hedging, which we used to have in financial results, now have an impact on the operating profit, and this is the part that you are rightly focusing on. You might remember that in the first quarter from IFRS 9, we had 300 million negative charges impacting that, minus 200. That's the current figure, so we've improved by 100. The second half of the year, we are well hedged in terms of currency effects. You know our approach. We are conservative in nature, and this is coming to fruition. And you've seen that volatility, for instance, in Turkey or Mexico, the currency, which we did in our pricing, you can see that in the volume. Part of the reduction in volume for Skoda can be found in the cause of the krona in its relationship with the euro, the exchange rate. I'm never relaxed in terms of exchange rates, but I'm more relaxed than I was 5 or 6 months ago. Volatility will happen, and it's always a bit of crystal ball gazing involved, but that's the state of our current knowledge. Our hedging is surely bearing fruit now, and so it is a tendency which we will continue. We'll not try to improve operating profit by speculating on interest rates or currency exchange benefits. We will not do that. Time is snapping at our heels, so my request going to you, please wait for the roving mic and ask please 1 or 2 more questions, and Mr. Witter will give short answer. Mr. Hetzner will give a good example, and then we'll continue from there. Christian Hetzner, Automotive Division Europe. I wanted to ask a short question on the efficiency target. Is that 30% by 2025? For the brand alone, for VW, we had 25% by 2020 now. Are we meant to add these targets together to collate that, or can you only do 5% for the brand VW, and for the other brands will that become important? And the second follow-up question, if I may, on SEAT. You set forth the ambitious, exacting target to position it so that it will be at eye level with the competitor Alfa Romeo. We had that in the past, many years ago, you know, but for the first time we might have more product substance. Of course, you've got the Cupra sub-brand, but you're still lacking to be a serious competitor. You're lacking the tradition, and Alfa is simply miles ahead over SEAT. How do you want to achieve that? How do you want to catch up there? Well, these are the latest figures agreed with Oliver Blume. Those are group figures. We want to improve productivity clearly. And the production system will be more in the limelight of our focus. Oliver Blume is putting together a new team to manage that. And production over the past few years was not set at group level in that area with a management responsibility focusing on that. We have to design that, and I assume that they take their targets serious and that they make it. The productivity targets by 2020, that target remains. We are on a good trajectory with some few exceptions. Component making is on track for the last 2 years, and in the plants, due to WLTP and utilization of capacity, will not achieve that 5% figure in all the plants. This was one of the best announcements of the past few weeks. Wolfsburg won the Lean Award, and it shows, it's not so easy to come by. You've got to convince a jury that you're on a good path. And Wolfsburg is on a good trajectory indeed, and working towards achieving the 25%. Those targets are not additive, of course, cumulative. We've got a different time horizon. But what we agreed in the Zukunftspakt, the Pact for the Future in Wolfsburg, and for the brand Volkswagen, of course, applies over a longer period for the whole group. And let me put it succinctly at that point, for a volume maker in production, we have more potential. Our big competitors in volume car making, Toyota and Hyundai, are very good. They have very productive plants there, even during SOPs. So there is a little to catch up, and we'll leverage that. Production cannot be seen in isolation. Good production means that you've got to have a high-performance supply network, that you've got a good process chain to the customer. Process orienting is a big potential to leverage here, also in terms of margins. Look at the evaluation of the processes. We're doing around about as much sales as Toyota, our main competitor worldwide, and revenues on a par, but the value generated is 3 times as high for Toyota, because in the volume segment they achieve a continual high-margin approach with a productivity advance. And we see a lot of potential that we can leverage. With the new structure, we see potential here. SEAT. Now, yes, you can put it in the manner that you have. Alpha, of course, has a beautiful history as a car maker. However, when you look at the figures and the growth that we see for SEAT, that we've been seeing in terms of track record and the quality growth and the margin growth, sales per car and margins per car and emotional benefit per car. And we are much bigger than Alfa Romeo. We have to add that. The brand is not yet worldwide active. It's a very much Southern European brand at the moment, but we give it potential for growth now. During my vacation, I was driving an Ateca Cupra, and I can tell you, young people are really, it's turning heads with young people. So it's the youngest car model, very attractive to young people. 35-year-old people, if you ask them, what is Alpha? They'll be puzzled. They haven't heard of the brand. In our sort of age group, is a great brand. But since I've been looking at cars and makes, Alpha's been in decline. So that halo of Alfa Romeo is a while back. I feel Luca De Meo and the brand can do it. Luca De Meo is a very committed person who's achieved that for other brands as well. He's on a good trajectory. The Cupra brand will be very much in focus now with the SUV, and the Tiguan size and footprint expands to the larger cars. The design is highly emotional. The electric car in the next generation will be highly emotional. Of course, it's a long and rocky road to take, but we have better opportunities to make that. The substance in the product portfolio is there. The team's motivated. The markets are reacting. We are seeing tremendous growth for SEAT, and we're getting young customers to buy these cars, which is a fantastic prospect for the group. Ms. Hetzner wants the mic. Please do bring the roving mic to our large question. 2 questions. Sebastian Schmidt from Börsenzeitung. The first, if I may, would like to pick up where you left off. Reducing complexity, you mentioned, and with the ID and the new vehicles with hybrid drives, in addition to the diesel cars you make, which you feel continue to be an important part, petrol engines, etc. A lot of complexity on the drives side. With the Cupra, you've got another sub-brand for Skoda. Where exactly is that savings potential for complexity you intend need to leverage, and you've always wanted to make production more efficient in an ecologically sensible manner. That would make sense to go electric, but in terms of the group structure, I don't see what you want to develop here. For WLTP, you said you discerned this as a possible project in the way very early on, but looking at competitors, they seem to have advanced further already. Is that an annoyance to you? 3 years after the diesel scandal, in how far can you use that as an excuse? You know, we've got the diesel scandal, so we're not quite as advanced as others because our capacity is tied up in the diesel issue.
Well, complexity and reduction of complexity, yes, we can do that, and quite clearly. So with all the new models, the new Golf that comes will have about 30% less engine gearbox variance, and this permeates the entire product portfolio. Audi is very strongly working towards reduction of the off-road drives. We have very high amount of staggering, 10, 15 kilowatts sometimes. Lots different approaches for Skoda, Seat and Volkswagen in the different categories. Very often the differences are minimal in nature. So quite a lot of things need to be done. In the past, we did not focus on it too much, I think I can say that. And 2 or 3 years ago, we started to focus on it. You will only notice it with the new cars that will come up. And on the engine portfolio, we do not have an extension as such. We'll continue to have plug-in hybrids. It's one drivetrain front lateral that we have, which will go into the Seat, into Volkswagen, into Skoda. So there are lots of opportunities. We get a clear reduction in complexity in the electrical world. We'll only have one drivetrain with 3 batteries. You decide for complexity of electric cars is less by a factor of 10, if not more, than that with the combustion engines, internal combustion engines. We are very consistent in using the electric toolkit, which covers all of the brands, Audi and the rest, that has a very similar structure. Only various variants will be different. So you see the number of variants will go down, but for customers this is hardly visible because the number of models we will have up there. We have started to thin out with a couple of models. As you know, we no longer offer the Phaeton. Golf Convertible has run out. EOS runs out. Scirocco. So a couple of things are happening in our product range. So everything that is not major for the brand or has major significance for the result has a question mark. So you can take it that we will achieve a clear reduction of complexity, in particular with the new models that will be up and coming now. And in the brands, of course, we ask ourselves in the question in various segments, do we have all brands to come in with the compact segment, with A0, with A00 in the up category? We are asking this question, and we continue to address it. Through our toolkit, we are in the position to offer some of these variants rather cost efficiently. But again, here we'll talk about the brand positioning and the question, and we'll raise some questions there. And efficiency, you're talking about WLTP. Yes, of course it's hurting us. There's nothing to be said against it. We hope that we would be a bit better off if we're really honest with ourselves. We saw a couple of mistakes that we made, and we have to remedy the situation there. I think I cannot really reproach the teams. They have fought for it by way of resources. We've done everything. It went a bit bad, but it's not going to happen next year. Now this brings us to Ms. Lohner. Mr. Witter, if I understood you correctly, you said for this year you talk about costs of 5.2 billion overall for the diesel scandal. What's the said mix? Well, the 5.2 billion is the liquidity that will leave us this year. It's compared to the 16.1 billion from last year, that's financial year 2017. So the 27.4 or 5 billion overall diesel costs, and that's the part that is for the financial 2018. That's the money moving out for diesel-related issues that we prepared or provided for it. There was one next question. Yes. And what are the further costs that you reckon with for this year? Well, for diesel, of course, for each and every closure we evaluate, we have to evaluate all of the risk positions. We did. As of today, from what we know today, we take it that for all of the risks we know, we have provided enough financials. But of course, there are risks of assessment. There are lawsuits that you cannot foresee, so there are certain insecurities. As you know from our financial reports, no one can remove that from us. I can't tell you that this is finite. As regards the payout for diesel issues as we know them today, we'll have some not so substantial amounts below 1 billion in the next 2 financial years. So for what we know today, at the end of this financial year, most of the liquidity will have been digested. As of today, for all of the risks known to us, as requires IFRS requirements, we have made provisions and we have given assessments for all of the individual topics. Now, to the very end, Mr. Bothe. Mr. Dies, now finally on electromobility, e-mobility, a potentially disruptive competitor with the name of Tesla. There are reports that talks are held between Rhineland-Palatinate and the Saar state. It would be a high-wage area where a gigafactory is supposed to be set up. Do you not have the visionary power, or are you impressed by these types of announcements of Tesla, or not at all? Well, of course we take Tesla seriously, although there seem to be a couple of drawbacks. And you have to say they're doing 5,000 cars per week. That's the amount of Passats that we're building. So apparently they are in a position to go the way of mass production. Still, the case of Tesla shows that we are standing a good chance. We are not just totally on our own when it comes to new competitors. It's rather elaborate to set up a worldwide automotive brand. There are estimates that talk about 20 billion that were moved in and so far have not led to an economically feasible result. Nevertheless, we take them very seriously. Tesla's product substance in some area is quite remarkable and innovative in certain areas, so we take them seriously, but we believe with our MEB approach and electric cars, we will be able to withstand competition. Now, with batteries, you're right. This is something which I don't like, that we weren't able to set up battery cell production in Europe to have a European manufacturer. We are missing a European manufacturer in the world, from what I believe, because Europe can do a lot when it comes to innovative battery production. We have great mechanical engineering here in Germany, packaging industry, electrical, chemicals, BASF, etc. So we really have the companies and everything that we need to build cell factories. We somewhat shied away from it because this typically would have been a task rather for our suppliers. If we went down so deep into the value chain, we would be isolating ourselves quite strongly. If we invested, our competitors most probably would not buy cells from us. We would lose economies of scale. So we relied on, at some point of time, a European manufacturer consortium would come up. From my point of view, there are quite good ideas. I'm quite glad to see that the Chinese come here, CRTL, with whom we are cooperating quite extensively in China. There are other Chinese companies moving into this area. So in Europe, an industry is being created. We decided to focus on the next generation. We are investing another 100 million into solid-state cells, which we see as the next step. We are very consistent here. We provide our own performance in it, and I won't exclude that we will maybe able to start a couple of European consortia, because we believe we do need a European factory. Now, to do a gigafactory, well, this is something which we denied for us, because the requirement for capital expenditure is enormous, and you move to a certain technology alone. When solid-state batteries come, then you would actually have to remantle a gigafactory in a couple of years' time, which is why we shied away from it. But all in all, I have to say, the development in Europe, I'm not totally happy with it at the moment. But in the next step, we can move along quite happily. We built up a lot of competence in Salzgitter and pilot stage production. So I believe in the new electric world we're moving quite well, and our Korean partners are investing quite a lot in Europe. So in the first generation of MEB cars, we will be very competitive when it comes to the battery. So this is not something which is a problem for me, this announcement of Tesla. Of course, they will have to put it into practice. But again, I have to say, I'm very pleased when Tesla goes the next step, because this actually is an incentive for the industry. We are measured by them, and it's quite good to have a new competitor out there in the world. And on top of Tesla, there are a couple of Chinese companies that are very committed, and they work without the legacy of old cars, old-style cars. They can focus fully on the new technologies. We believe that we have a portfolio that is strong in revenue, and we believe that we have just a good hand. Problems that Tesla has, ramp up in a factory, that's something which we do not have. This is something which we could do, and this is something which we will work with when e-cars are coming. We'll be able to produce lots of e-cars very quickly in China, in Europe and the United States. Race is open, but we are pleased about the competitors and the visionary power. I think we have that as well, don't we? Ladies and gentlemen, thank you very much. Thank you very much for having joined us here in Wolfsburg. Those who want to stay here are cordially invited. It's quite cool in here. It's much hotter outside, and I wish you a safe journey home and a good day. But the last word for the next 15 minutes rests with Dr. Dies. And by the way, diesel has never been our excuse, and it hasn't been today. The team can be very proud. Before diesel, our return was 1.5%. Volkswagen, that is, we lost a lot of money in Latin America, in the United States. We are 3 years after diesel now. Volkswagen granted a 5% return in the first half of the year. And so after diesel, we are much stronger than before diesel. So diesel cannot be an excuse for us. Thank you very much. Now, this was it. So have a great day, everyone, and thank you.